Good evening, everyone. How are you tonight?
Good.
Good evening, Melville. How are you? I see Colt is on. Some other friends. Thank you all for joining us. I just wanted to start with a quote. We are living in an historic time where lots of farmers are retiring. 42% of Iowa farmers say they'll retire within the next 5 years. We have an opportunity to help beginning farmers, and Practical Farmers of Iowa is in the right place at the right time to support as many beginners as we can. From the Rosemans in the left here, from western Iowa, to Sarah Hansen in northern Iowa, we want to help you succeed. So our Farminars are one way we do that. Online learning with farmers as the speakers. We hope you join us each week from November 1st till March 6th, with a couple breaks in there. Thank you, Melville. So learn from farmers is always so nice, and we hope you can enjoy these online seminars as a complement to your all year round learning from farmers. Thank you to the Beginning Farmer Rancher Development Program, our sponsors that make it possible for us to pay our speakers for their knowledge, as well as organizing this event. What is Practical Farmers of Iowa, you ask? It is a grassroots nonprofit organization, an open, supportive, diverse group of folks that advance profitable, ecologically sound, and community-enhancing approaches to agriculture. We have 100 members outside of Iowa, and about 1,600 members in the state of Iowa. And we hope you can join us as a member with an annual membership of $35 for an individual or $45 for your whole farm. We have a whole bunch of great programs to offer to enhance your farming planning and also your farm realities. So when you have questions, we'd love to help you network with folks who know the answers. We have a bunch of different offerings. Our Find a Farmer website helps Iowa beginning farmers to post their land needs, as well as Iowa landowners and folks around the country to post land availabilities. I'll take a question real quick from Angela. There is not a Practical Farmers of Kansas. Practical Farmers of Iowa is just in Iowa. Thanks for your question. So there's lots of things you can learn from our Iowa farmers while you're in Kansas. Thanks for joining us on this Farminar. Our Savings Incentive Program is another great opportunity to learn from farmers and to get help in writing a business plan. I hope that Jason Jones and Erin Drinnin talk a little bit more about the Savings Incentive Program tonight, as they are one of our first round participants in that program. We have meetings coming up to talk face-to-face with other beginning farmers and talk with experienced farmers as well. Field days on farm to learn technical know-how and a bunch more. So we really hope you join us on our website, practicalfarmers.org/join. A couple things coming up. Richard Wiswall is a very talented veteran farmer from Vermont who's going to lead a business planning retreat on December 8th and 9th in Boone, Iowa. Register by November 15th, and you can follow that link right there to go to our registration page. Our annual conference is also a must-attend event for folks in Iowa, if you're close. This year it's called Made from Scratch. And we do offer discounts to members, and early registrants save money. It's about $100 and some for the 2-day conference, including meals. So it's a very good bargain. Well, enough about me talking. I'd like to hand it off to our speakers we coordinated for this talk tonight. Beginning farmers Erin Drinnin and Jason Jones will begin. And I hope you get to learn from them as they're in the stages of getting ready to look for financing. And finally, we'll invite our friend Andy Hunziker from the Farm Service Agency to speak about the farm loan opportunities from the FSA. I'll pull up your slideshow, Jason and Erin, and then you can begin.
Great. Thanks, Luke. Well, welcome everybody to this Farminar. It's great that you could all be here. Let me just echo, first off, Luke's comments about PFI and what a great organization it is. Coming back to Iowa from both coasts, actually, at different times, I found PFI to be the premier organization in Iowa that's there to help farmers, and especially beginning farmers. So just know that there is a great group of people out there willing to help and answer any questions that any of you might have about starting an enterprise or making your enterprise better or more efficient. So my name is Jason Jones, and I'm here with my wife, Erin Drinnin. We are beginning farmers from Des Moines, Iowa. I am currently employed off of our farm as a farm manager for another farm called the Homestead, which is located in Pleasant Hill, Iowa. We have about 100 member CSA. We grow fruit and vegetables, and the CSA is our major market. We also market to some grocery stores and things like that as well. My wife is not employed in farming at all. She works for the Department of Public Health. We've been married for 7 years. We got 2 kids, and we're both from Des Moines originally and living there now. We'll probably try and stay as close to Des Moines as we can, as that's where most of our family and community is. So a little bit about our background and experience. The thing that got me into farming, I guess, or what solidified my interest on a small market farm, and came back to Iowa and did a little work at Iowa State while I was trying to get involved in the ag community here. I was fortunate enough to come upon a job at the Homestead, which is an organization that serves people with autism. They have a vocational program that helps the people that they serve gain skills and abilities through work on their CSA farm. And I've been doing that for about 7 years now, and over the last year or so I've been doing some consulting for another small farm in Redfield called Raccoon Forks. The other thing that I've been fortunate to be involved in is the establishment of a new market for a lot of local producers, which is the Iowa Food Cooperative. I've been serving as the board president for the last 3 years, and my term is coming to an end. And we're excited about the growth of the cooperative and all that kind of stuff. So that's basically the gist of our experience. Our current farm is just a small 1-acre farm. It's located on the east side of Des Moines. We purchased the house that we live in now, and we mainly because of the land that was on it. The original intention was to use that land to kind of act as a jump or springboard onto a larger farm, to use that farm to gain some experience in small-scale production. But we've kind of run into some roadblocks with that property, and we're looking to expand to a larger farm. Those roadblocks include limited land availability and also some infrastructure problems with, having enough electricity to run equipment to store vegetables and things like that. So that's pretty much the gist of where we're at right now. So we're on a very small farm that does very little marketing to grocery stores and through the Iowa Food Cooperative, and we're looking to get into a larger piece of land so that we can increase our marketing efforts. We're in the process now through the Savings Incentive Program to complete our business plan. We're hoping to have that finished by June of next year, of this upcoming year. For those of you that aren't familiar with the Savings Incentive Program, it's a program that PFI started last year, which is a great program. It encourages beginning farmers to sign up and to start saving towards some type. It doesn't necessarily have to be a capital expense, but a lot of folks are using it for that. The goal is to save at least $100 a month for 2 years, with the goal being that at the end of that 2-year period, if you've completed your business plan and completed the other requirements of the Saving Incentive Program, that PFI will match that $2,400 worth of savings, and then you'd have $4,800 to be able to do something with. Now you use it for a piece of equipment. In our case, our intention is to use it to purchase a walk-in cooler, or you could use it for land or things like that. Personally, we've set a goal of saving $35,000 by the end of December of this upcoming year to use as a down payment for our farm. And our farm is going to include where we live, obviously, so that'll go towards that. We're hoping to get our house on the market in January of 2013 and sell that property and get into the new property shortly thereafter. And then with that, we would hope to be implementing the first part of the business plan at that time as well. So that gives a little bit of history about us and where we're at right now. Anybody have any questions or anything like that? Okay, I think what we're going to do now is turn it over to Andy Hunziker and let him introduce himself and give you a little background about what he does, and then we'll go from there.
And I would just say, this is Erin, sorry I'm jumping in, but this slide we really meant to just give a little bit of context to kind of how we arrived on this Farminar and how PFI kind of asked us to, and how they got us hooked up with Andy, was that we're really at a point, hopefully you can tell by the history there, that we're at a point of developing our business plan and we want to expand our business. So we're looking at financing options. So this slide really is just meant to provide an overview of the financing options that we've looked at, and that, you know, I'm sure Andy will talk about several of these. And then a little bit in terms of considerations, because this is certainly important for us, but I think probably important for everyone to think about some of these elements. Certainly Andy can talk more about this, but some considerations for us in terms of questions about what's right for us are things like, we both have good credit, but we do plan to keep at least one off-farm income. So we plan to still have me working in an off-farm job, and that may exceed half of our total income, which I think is an important consideration for some of the loan options out there. The other thing that it might be a little unique for us is that we're hoping to ideally also purchase our home on the property. We have options there, I think, where we could potentially purchase land separately, but our probably ideal situation would be to purchase a home on the property. And we hope to have some percentage of the down payment, probably between 10 and 15%.
Wonderful. Would you like me to switch up the slides now?
Sure. Maybe what we could do first is, because I think it's probably a nice transition, our first question is really kind of a broad question about what types of financing are available and what some of those important considerations are, like restrictions, interest rates, that we would want to consider.
Great. Do you want to answer that, or do you want to?
Well, why don't I'll start with the overview of myself, and then I'll get into all those questions, because a lot of my slides will be related right to that.
Okay.
Cool.
Well, good evening, everyone. As I was introduced, I am Andy Hunziker. I'm the farm loan manager here in Boone County. Basically, I want to start off with that I do service 4 counties in the state of Iowa: Dallas County, Greene County, Boone County, and Story County. And as far as the state of Iowa, there's approximately like 40 to 42 counties in the state that actually have a farm loan presence, which means if you're on an off-county, if you're at an off-county where there isn't a farm loan presence, you just have to visit one of your neighboring counties, and usually they're only 1 or 2 counties away. And Boone County just happens to be centralized amongst all those other counties I have. So, I'm essentially only a half an hour drive away from most of my customers, which works out pretty good. About myself, I grew up on a farm in northwest Iowa. I am a graduate from Iowa State University, and I graduated in 2004 with an ag business major, and I had an emphasis in finance, and also double majored in economics. Right out of college in 2004, I began my employment with the Farm Service Agency, and been there ever since. A little bit about what I work with day to day. I have all types of operations. I've worked with vegetable farmers that only have a few acres, all the way up to very large row crop operations of 5,000 acres plus. I work with very diversified farms as well. We have livestock, cow-calf, feeder cattle, swine, anywhere from farrow to finish, to just buying feeder pigs and take them all the way up to market. And also have a specialized Berkshire hog operation too. That they raise purebred Berkshires, and they are shipped off to Japan because they like I would say, more of a fattier meat over there. And then poultry too, anywhere from chickens, turkeys, you name it, we do it. I also work with day to day on specialty types of operations, not your typical corn soybean operations either. We have organic operations, I have greenhouse operations, even retail greenhouse operations where they sell your shovels and everything else, along with the plants, flowers, and other vegetables and so forth. Livestock confinement, they're still producing a commodity. We work with them too. And I even had a customer in the past I worked with that was a nut farmer. He had hickory nuts, walnuts, and all sorts of things that we worked with. And he had to buy equipment too, to process the nuts. So that's what I work with day to day, and I would say most farm loan officers or managers here in the state of Iowa can say the same thing for their portfolio that they work with. As far as our available programs, there are many programs that we have. And in addition to these slides, there is another file out there I believe Luke put up there that's for direct and guaranteed loans fact sheet. I encourage you all to look at that either throughout this or afterwards. It also spells out our loan programs in a nice little summary as well. I'm going to begin with our direct loans and start with the operating loans. Anything with FSA, there's always an opportunity for 100% financing. We can do annual operating loans. The interest rate currently is at 1.375%. We can either do them for 1 year if that's for like crop inputs such as a seed, fertilizer, chemical. When you put the crop in, you borrow that money, and at the end of the year when you sell that crop, you pay it off in full. Or these operating loan funds can also be used for term-type assets such as machinery, equipment, and breeding livestock. I should state that there is a loan limit, though. At no one time can you have more than $300,000 borrowed. Now, if you borrow that $300,000 and pay it off, and then borrow another $300,000, that's just fine. But at no one time can you borrow more than $300,000.
Do you need more than that, Jason?
So the operating loans would be different than, I guess, they're just for equipment and for seed and things like that. You don't generally do operating loans for land.
No, my next few slides will get into that, the real estate. This is mainly for, like I said, seed, fertilizer, chemical, 1-year type input operating, or feed for livestock as well. And then machinery, equipment, breeding livestock, where we can lend up to 5 to 7 years. 7 years is the max on those term type assets. And now I notice here that I have my interest rate at 1.375%. That's my new November rate on that fact sheet. I wasn't able to get the new one off of our website, or actually it wasn't posted when I sent this in. So I believe that the rates on that fact sheet are going to have our October interest rates, but I'll have the new ones listed as we go through it here.
Are there any minimum loan amounts?
There is no minimum loan amounts. I'm trying to think. I think the smallest loan I've ever done was $800, and obviously I've maxed out our limits many, many times with today's the rising cost of fertilizer and seed. We generally don't take long to spend $300,000 anymore.
Are there any collateral requirements or anything like that?
Well, we are what we call cash flow lenders. Security is kind of a second thing we look at. As we put together a whole farm budget, which means we look at 1 year's income, 1 year's expenses, and that includes everything that you have non-farm wise too. So, as you said, there's non-farm income in this case. You're going to plan on keeping one non-farm job. We will put that in the cash flow, and we also put living expenses in too. And as long as it produces a positive margin, we can write the loan. Now, the second part that I should state is we have to have at minimum 1-to-1 security, which means, say we buy a $30,000 tractor, I can lend you $30,000 on it, but I can't lend you $31,000 if the tractor's only worth $30,000. So,
okay.
Does that answer your questions there?
Yep.
I will get into a little bit about the eligibility requirements for our loans here before I start talking about our real estate loan programs. First of all, you have to be a U.S. citizen. You have to possess the legal capacity to incur the obligation of the loan, which means you have to be 18 years or older. You have to have farming experience. And I say that term loosely because we've had people that just graduated from high school, grew up on a farm, and got a tractor loan from us. They just have to have some sort of general knowledge of what they're doing. You just, can't be an investment banker all your life and then come and want to plant corn. So we have to have some experience there. And for real estate loan applicants, you have to have a minimum of 3 years of farm managerial experience. Typically, they'd like to see 3 years of owner-operator of your own farm. But that's not necessarily the case. Say you've worked for a farmer for the last 5 years and you took part in management decisions such as selecting seed varieties or feed rations, and that owner of that other farm operation can document that for us, we can accept that for that 3-year minimum requirement. Do you have any questions with that?
So in my instance, so I work for an organization that has a director and an organizational structure. So I would just have to have them write out a document that says that Jason does have X number of years of experience doing these types of things.
Exactly.
Okay.
We would want them to draft a letter that states detailed management decisions that you made on other operations. I was looking back at your slide. I have it printed off here. As a farm manager, just to give me kind of an insight about, to tailor this a little bit about what you have been involved in, what were your day-to-day management decisions?
I plan out, well, actually I do everything from seed to sale. So I select varieties, I prepare fields, I make decisions about where we're going to market things and how we're going to market. I make decisions on what's going to get planted in terms of quantities and varieties and things like that. And then I, manage all aspects of production from that from the beginning to the end. So
Okay. So you do. My biggest question then is, as far as sales, do you actually take the commodity out there and get the price that your company's looking for,
yes,
and you're the one that accepts that, or do you have to I'm just asking at this point just so I have an idea, or do you have to relay that information to, say, a boss or a supervisor and have them make that final decision?
No, I set the prices myself.
Okay. Well, basically, from what I'm hearing here is that would meet the criteria for the management decisions, and all we would have to do is have a supervisor or boss or the owner of that operation I'm trying to think, that the homestead, just draft us up a good detailed letter, and that should be sufficient.
Great.
I saw that there was a question up here about for 3 years, do you have to file a Schedule F? And that is no. I've had high school students that have had cow-calf operations as 4-H and FFA projects that have had them for 5-6 years. And they had detailed records for those programs that they were involved in as far as 4-H or FFA. And we used that to show that they actively managed, that they were purchasing the feed for it, and they were taking say a cow-calf operation, they were deciding when the cows were being bred and so forth. That works. We do like, if you're a regular corn, soybean, grain operation, to see Schedule Fs, but that is not necessarily the case. It should be, the decision will rely on the farm loan manager or farm loan officer that you're working with the agency to make sure that you meet the procedural requirements that we have. I'm going to move on next to, there is a slide in here about youth loans. I'm going to skip that unless anybody wants me to go over that, but mainly that's just a $5,000 loan that's tailored to if you are involved in a 4-H or FFA project and you fall into that age group of 10 to 21 years old. Unless if I see any questions come up about that, I can go back into it. As far as the real estate loan programs, we have basically 3 different real estate programs that we try to that we have to offer as far as the Farm Service Agency, and we'll go through every one by one. They each have different terms and so forth. The first one is just a strict direct farm ownership loan. FFA can loan up to $300,000. And that's 100% financing. There is no down payment requirement whatsoever. The catch is, though, I know agricultural land has really gone up lately. It has to appraise for what we're lending on it or more. So basically, you bought a farm for $300,000 and we have an appraisal done and it comes back at $290,000. We can only lend the $290,000. So that's the only catch that really comes up with that.
Who typically appraises the land?
We have a third-party outsource that takes care of that. We pay for the appraisal as the agency, and in the state of Iowa, we just submit, every time we approve a loan, we submit that to our state office, and they just pick a certified appraiser in the area and complete that appraisal and send it to us. Me, as the loan approving official, has no decision on who that appraiser is.
Does the appraisal cost get factored into the loan?
No, because the agency will pay for that appraisal so that it's an unbiased one.
Okay.
And usually, I mean, I don't know if I can. Everybody's case is different, but a lot of times the appraisals are $500 to $1,000 that we take care of for you.
I see.
As far as, so for this particular program, there is no down payment requirement, as I said, and the term of the loan can be up to 40 years. Now, I encourage you all to sit down, if you are looking at purchasing a farm and looking at this program, to at least sit down with the loan officer and look at the difference between a 30 and a 40-year term, because in a lot of cases, the payment difference between a 30-year loan and a 40-year loan is, you're only talking about $1,000 a year, but you're paying 10 more years on that note of a $10,000+ payment. It just depends on how much money you're borrowing. And currently, this interest rate on this particular program is 3.75% fixed. So once the loan is written, if that's for the month of November, that's the interest rate. So if I get the loan written this month and approved, that's your interest rate, and that'll be fixed for 40 years. There is no minimum loan amount. I can approve a loan as small as $500 and so forth. The only catch to a lot of these loan programs, which the interest rate's cheap and it's a fixed interest rate, but with all of our agency programs, I guess I did not catch or have this in my slide about eligibility, is you have to show the financial need. And what that means is that you must have done due diligence to see if you can obtain a loan at a bank. Our goal as the government, lending money at a low interest rate, is to get you financially sound enough to go to conventional credit. We want you to succeed in your operation and go to the private sector and obtain your loans. Granted, the interest rates will be higher. I know, because I have a lot of customers that come to me and say, hey, I don't want to leave. I made quite a bit of money over the last 5-10 years, and why would I want my 4% loan to go to a bank at 6%? Well, we did our job then. If you're sound enough financially to go to a bank, that's what we look at. So at the time that we write the loan, you may have, if there's any reason, a lot of times for real estate, it's down payment requirements. A lot of times banks want 25 to 35% down. We're 100% financing. We don't have that. So we can get you that first farm bought or first tractor bought and get you going in the right path. And as you make money over the years and succeed and grow financially, once we feel that you meet conventional lenders' lending criteria, we may ask you, even though the loan's not paid off in full, we may ask you to go and see if a bank's willing to take you on. If you come back and say no, they aren't, that's fine. We'll just keep the loan in place. But and we don't push you out regularly. We know what banks look for. So if by the time we ask you to look at a bank financing, we are really confident that you'll be able to get bank's financing.
Do most beginning farmers depend on FSA rather than commercial or regular bank financing?
Well, I cannot answer that because I don't have any statistical information, but I have to say I have a lot of beginning farmers that I help with in my 4 counties that I service. And the catch is here, when I get into the other 2 loan programs as far as real estate that we have, you'll notice that they participate with a bank. So by doing that, we are lending a portion of the loan at a lower interest rate to help you financially, but we also keep your feet in the door at that conventional bank. There are many circumstances out there where a bank can get stuff done a lot quicker than us, and I hate to say it that way, but it's true. And if you ever are in a pinch where you need an extra $5,000 for 2 weeks to get you through something, they can pretty much that same day have you write your name down once and get that loan to you if you already have your foot in the door with them. For us to do it, we have an application process. We have to make sure we dot our I's and cross our T's before we can lend you taxpayers' money. And we cannot get it done in a 24-hour turnaround. So,
has that interest rate changed at all over in the time that you've been in your position?
Interest rates change month to month. However, whatever month we approve the loan on, that interest rate is set and fixed. Now, say I approve your loan the month of November and the interest rate is 3.75. Say we're waiting on appraisal or something and we don't get it closed until December. And say the interest rate fell to 3.5%. It's always the best interest rate at the time of approval or at the time of closing. So you would get that lower interest rate. Now, say in December, if it goes up to 4.5%, you still get that 3.75. It's just whatever is less, either at approval or at the time of closing.
And can you, I mean, maybe it's not important, but I'm just kind of curious, how is the rate indexed? Like, how do they come with that number?
Okay. From what I've been told, the interest rate that is offered to you is it's what it costs the government to borrow the money at that time.
Okay.
So you're basically, we are not, we are the government. We aren't making any money on this, but what it costs the government to borrow that money to lend to you, that's what they're offering it to you as. As far as these programs, there is one program that I will go into, and I think it's my next one, my next slide. That interest rate is actually subsidized. Why don't I explain this loan program while we're on this slide here, and if you have any more questions, we'll answer them those. This is our next real estate loan program. It does require a bank's participation. Think of it this way. It's the 54550 Beginning Farmer Down Payment Program. I say beginning farmer, that was the old language used, but now if you're a socially disadvantaged person, which is if you're a minority, it's also open up to you even if you don't meet the beginning farmer definition. So basically the 54550, what that means is 5% cash money down on the purchase price. It's the 5% of the purchase price. You still have to meet that farming for at least 3 years, but no more. You have to have been farming for at least 3 years, but the catch is to be beginning farmer, you cannot have been farming for more than 10 years, or that 3 years of farm management experience. So at least 3 years, no more than 10. Unless you're a minority, then they take that 10-year cap off of it. A lot to digest right there. I'm sorry, what was that?
Are you still with us? Jason, do you get what we're saying?
Yep, I got you.
Sorry, just checking for understanding.
And then the next portion, the 45%, that's what FSA or the Farm Service Agency will lend you. 45% of the purchase price up to $225,000. The government does cap that off. So I will lend you 45% of the purchase price. The interest rate is at 1.5% interest fixed for 20 years, and that's on the next slide there. And FSA will lend it for 20 years at 1.5% interest. And that interest rate there is lower than what it costs the government to borrow the money, so it is an actual subsidized interest rate for you. But it's fixed for the term of the loan. Now the catch is that where's the other 50% come from? Well, it comes from a conventional bank or a bank in your area. Most of the time, farmers in our area work with small town community banks. It could be credit unions or the famously known Farm Credit Services. They will get the first lien against the property or first mortgage, and FSA will take a second mortgage or second lien. And the bank's portion or Farm Credit's portion has to be a 30-year term. We can set payments up either annually or monthly. It depends on how your income comes in. That's how we look at that. If you're a regular corn soybean operation, obviously it's annually. When the crop comes out in the fall, it's due. We actually give you a few months to market your grain. Typically in Boone County, I allow it to the following February. Now, if you're, I'm trying to think of a certain circumstance why I would have a real estate loan monthly. If you're maybe some vegetable operations, if you have income coming in throughout the summer, I may request, during the summer months, have some sort of monthly amount coming to, and then have a balance due at the end of the year. It just depends. It's a case-by-case structure that we do. We always try to tailor it to best fit your operation.
That's a good idea. Can you tell me, do you have an idea of what currently banks are offering as interest rates? I mean, just as a general, I know each bank is going to be different.
Well, I'm going to hit two of your... Okay. I'll answer two of your questions I saw on a slide of yours. What banks will, the typical bank interest rate, I can't really say because it depends on how you want the bank to fix that rate. Now, banks have variable interest rates, and they can do 30-year fixed rate. I can tell you 30-year fixed rate is probably close to 8-9% right now when it comes to agriculture loans, because these are not housing loans. They're different. Now, if you do currently I just worked on one where it's a 7-year fixed rate, 30-year amortization, where the interest rate's only set for 7 years, and after that it can adjust, and that was at 5% fixed.
Okay.
Now, you were in a slide, you indicated the Iowa Agriculture Development Authority. Now, That is through the state of Iowa. I am the federal government, so that program is a totally different program. But what that does is they have a tax-exempt bond that they can issue to that bank that you're working with, and that would buy down your interest rate approximately 1%. Now, every case is a little bit different, but I've had some within the past 4 or 5 months where the bank's interest rate was under 5%. For the first 10 years, fixed interest rate for 10 years. The banks do not require additional down payment on top of our structure of that 540, 550 because we are giving them the first lien on that property. So essentially, they already look at it as a 50% down payment.
Okay.
Does anybody have any questions there on?
Can you go back to the slide right before this one? I just want to clarify. So in terms of the requirements, applicant must have farmed for at least 3 years and no more than 10. Okay, that makes sense. Or 3 years of management experience. Does that mean no more than 3 years of management experience?
No, if you have not been farming for 3 years on your own, we can also substitute that as 3 years of farm management experience. I didn't type that slide very orderly. But yeah, it's either 3 years of farming on your own, or if you've been managing somebody else's operation, such as what we discussed with Jason as a farm manager. That works the same way.
I get one other quick question that I have is, how do people decide what's right? Because it seems like the direct farm ownership loan would be a better deal for most people in our situation, being that it's 100% financing. Why would someone pick a down payment farm ownership loan over a direct farm ownership loan?
The main reason is the payment. That 1.5% money buy down. Now, I can't give you any numbers right now. I have to actually pencil it out on a case-by-case circumstances. But a lot of times, your payments almost the same as that 30 or 40-year loan, or slightly lower, even though you're paying the bank's interest rate on the other portion. If you can just come up with that 5% down, you financially in 20 years will be so much stronger than if you go with that 30 or 40-year loan at no money down.
I see. Okay.
And that one might be more, I mean, we haven't attempted to obtain a loan at a bank, but it sounds like if you could obtain a loan at a bank, this would be an option to help support that.
All loan programs that we have, as far as, you know, what I was saying earlier about being the government agency can't compete with the bank, you always have to make sure that no matter what loan we work on, regardless if it's an operating loan or any type of these 3 real estate loans, we have to make sure that you don't fit a bank's lending criteria on its own without any of the agency's participation. But as far as that down payment farm ownership loan program, that gives you an additional step for being with us longer because you're already in with the banks a little bit by participating. And it's just generally, it's a better fit for a lot of operations if you can come up with that 5% money down. Did I answer your question there? Or?
Yeah.
Okay. Well, so as far as, is there any other questions between the difference of that down payment program versus the regular just farm ownership program?
No, I think that's pretty clear.
Well, the last program as far as real estate that I want to touch on is essentially that first program, the 100% financing, but it's when the loan amount exceeds $300,000, which I rarely do a real estate transaction under $300,000 anymore, with farmland being, $10,000 plus an acre here in the central part of Iowa. But so what they come up with, or one of our other programs we have, is this participation program. Say you have a farm that's $600,000 purchase price. You don't have any money down, but you want to purchase it. You come to us. Obviously, the bank won't do it on its own because you don't have any down payment, but you have good off-farm source of income, or your other farming operation on its own can subsidize this payment quite a bit. So cash flow is not an issue. Well, we can look at this program. 100% financing. FSA will lend $300,000 that 30 to 40-year time frame. Again, it's the same interest rate at 3 3/4. However, since you're participating with the bank, the government actually capped that. We will not go above 5% on that. So if interest rates rise, we will stop at that 5% mark. I'm going to give you a little bit of example. It's a lot easier to explain this way. Say you have the purchase price of a farm $600,000. FSA will lend $300,000 at 3 3/4. We will take a second lien on the property or second mortgage, and the bank will lend the balance, the other $300,000. They get a first lien, so once again, in this particular scenario, they look at it as a 50% down payment. Now, say you got a farm that's $800,000. Well, this program actually works for that as well. It's not necessarily we used to call it a 50-50 participation, but now with farmland values going so high, if the value of the property is $600,000 or less, we will split the difference. We'll take half, the bank will take the half. Now, if the farmland is, say, $800,000, the bank will have to lend $500,000 if they're willing to, and FSA will lend $300,000 on a second lien position. And a lot of times the banks will still tag onto this too, because they want you as a customer too. This is a pretty secure loan because FSA is taking the risk by taking the last $300,000. Any questions?
No.
No, I don't think so.
How much land how much do you think your farm would cost you to buy, Jason and Erin?
Well, we're looking at, it kind of depends on where we're at. You know, if we're figuring an average price of $7,000 an acre, the land cost would be somewhere between $70,000 and $350,000. We're looking at 10 to 50 acres, but a lot of it depends on the cost of the land, and I think the biggest issue with us right now, especially with regard to land prices, is our desire to stay within a 30-mile radius of Des Moines. There's not much land available around us that would go for less than $10,000 an acre, let alone $7,000.
Mm-hmm. Yeah, as far as, from what you guys were talking about saving, probably the best financial loan for you here would be that 540, 550 down payment program. Mm-hmm. I encourage you to, whatever county in which you're in, you'll need to speak to that farm loan officer or farm loan manager, and they can definitely pencil the options out for you to give you solid numbers on what payment structures you would have. But that would be probably the best fit, because it looks like you will have some down payment capabilities.
Yeah.
Now, one other item I want to touch on too before we have any more questions is if you're looking at buying a property with a house on it, we always have to sign a little caution on that. We do lend money for agricultural land if there is a house on it. Don't get me wrong, we do that all the time. But we don't want you coming to us with a $300,000 property where the house is worth $250,000 of it. We are out there to finance farmers and farming operations. We want the main property to be an agricultural property, have livestock buildings on it, or be tillable crop ground. So if you have a $300,000 house or farm that you're looking at buying, we don't want the value of that house to exceed maybe $100,000 to $150,000 of it. We want the main value of it coming from the agricultural land.
Okay.
Is there a ratio that you're using for?
Well, the way the procedure outlines it, it just states that the property has to have agricultural value to it. And without having the book here in front of me, I can't state how it is. There is no set ratio, but I think it alludes to the fact that the majority of the value has to be agricultural related. Okay. And so generally thinking 50%, needs to be the value of the ag land versus the house, the residence.
Okay.
That's helpful to know, I think, for us. And so then my question would be too, like these participation loans, does it matter to you all what that bank loan is, whether it's an ag loan or a home mortgage?
No, it doesn't. Obviously, home mortgages, you get a little bit better interest rate just because they could sell them on the secondary market, which that's totally out of my league. I mean, you're going to have to talk to the bank about that. But a lot of times, when it comes to an agricultural farm, and, even if you're only talking 2 to 5 acres of tillable crop ground, the bank can't use a residential house loan unless they survey off the house and do a house loan in the tillable ground. They would do an ag loan on. So that would be a question for your lender, but that's kind of my general knowledge of that.
So most likely we would be looking for an ag loan, it sounds like.
Yep. And, you were on the right page with that Iowa Agricultural Development Authority, because I know you can have a house loan or a house on the property with that, but once again, they have a criteria as well as how much the house can be worth, but I don't know those details.
Okay.
So, well, that's generally our programs in a nutshell as far as our direct loans. I don't have any slides as far as our guaranteed loan programs. They are on that fact sheet that we have out there for you. Really, all those are, just to give you kind of a general idea of them, is basically I'm out of the picture. What you do is you go to your local bank, and this is available to all states as well, and you want to get a loan. The bank is willing to do it, but you're just not quite up to their criteria that they have out there. So maybe they still want to do the loan, but what they want to do is they want to get an FSA guarantee on it. You go to the bank, they write the loan for you, you do everything through them, but behind the scenes they come to FSA and they ask for a 90 or 95% loan guarantee. And to generally simplify that, all it means is an insurance policy. Say the loan goes bad, we don't want that to ever happen. But if it does, and the bank does suffer a loss, we'll pay 90 to 95% of that loss. Are there any questions about that guaranteed loan program there?
I don't think so. Can you tell us a little bit maybe about lenders that so Wells Fargo is not typically someone you think about as an ag lender. Are there banks or lenders that you know of that are more geared towards that kind of lending?
I understand what you're saying there. And speaking on behalf of the government, we can never encourage one bank over another. I mean, you're going to have to do your due diligence and find an ag bank. But generally speaking, smaller community banks, especially here in Iowa, are more agricultural driven. They are far more aimed towards ag loans. And farm credit as well. That's what they do. And they have good rates. However, being that farm credit is not a bank, they cannot use that Iowa Agricultural Development Authority loan program. So that they're out of the question when you go to them, and just because of the way they're structured. Credit unions, though, too, I know they're getting increasingly popular in ag loans as well. Down in the Des Moines area, I haven't worked with any of them down there, but up here in the Boone area, yes, we have. And, that's only, 45 minutes away or so from where you guys are at, or an hour.
Sure.
So maybe that's an option as well.
Okay.
Great. Well, maybe what we could do now, if that's all of your slides, Andy, is maybe we'll switch over back to our slides and just ask the questions that we had come up with, and maybe some of them you aren't able to answer, but maybe some of them you could give us some insight.
And you've probably already addressed some of them.
Yeah, it looks like a lot of it's already been gone over.
Yeah, if you want some more clarification, just ask.
Okay. So I think we know what types of factors lenders are looking for. At least for FSA loans, it doesn't look like there's a whole lot of qualifications for those loans.
To interrupt you there, the main driving force for our loans is, first of all, you got to show financial need. And the second thing is, like I said, we're cash flow lenders. We always put together a projected cash flow for the following year, look at 1 year's income, 1 year's expenses, and 1 year's payments. And if it's positive, that's what we're looking for. And the cash flow is prepared from actual records that you may have from your own operation before you get this loan, or we research it. I mean, if you're expanding your operation and want to put something up that you haven't done before, we want all the information and research that you can get, and we use that to put our plan together. And we sit down together many times and make sure it's solid.
Okay.
Great. So I guess, yeah, this was kind of important given all the craziness that's going on with the financial markets right now. Has the ag loan industry at all been impacted by this, and or can you see any impacts in the pipeline,
Okay.
especially, I guess, considering this secretive process of maybe rewriting the Farm Bill that people are talking about?
Well, as far as how banks are doing, here in Iowa, I can say from my portfolio, we are getting, I wouldn't say anything has changed. If not, we are getting busier as the Farm Service Agency because the banks maybe are, instead of asking for 20% down on a farm, they're now asking for 25 or 30% down. But I don't think that really has anything to do with the bank crisis. I think that's just because the farmland values have increased so rapidly, they're scared that they might fall off again. And that's why they're asking for a larger down payment. I really haven't had any trouble with banks saying, no, we just don't want to lend the money to agriculture. I wouldn't say that's the case. I know there's possibly more fees and so forth, but you have the option of shopping around from bank to bank to see what ones that they have the best product to offer you. They are competitive, and right now farming's very profitable. Now, as far as us, the agency, we do work under a congressional budget, and our loans are funded through a budget. So every year, Congress sets aside so many dollars that we can lend. As far as annual operating loans and equipment loans and so forth, we really generally never run out of funds. Now, as far as real estate loans, there's a lot of times we approve the loan and we have to put you on a waiting list. Now, for the state of Iowa, typically that waiting list is never more 30 to 60, 90 days. Worst case scenario, possibly 6 months. Just depends on what type, when in our fiscal year you got in and got your loan approved, and how many other farmers out there applied in the same time frame. We never, I wouldn't say we never not fund you. I've had some that went pretty extensive amount of time, but generally, like I said, at 30 to 60, 90 days, we'll get that loan funded and get it closed. Now, if you have a purchase agreement that says you have to close within 90 days, and my loan doesn't come through, that's another one of the benefits for using that participation program, because a lot of times the bank's willing to close our loan on our loan on our behalf, but you have to pay the interest rate for that 6-month period, and so forth. But you can ask more details about that when you actually visit your local FSA office.
Okay. I think we talked a little bit, and some of this is probably outside of your realm, but it sounds like you have certainly provided us a little bit to think about in terms of kind of mortgage versus ag loan, and that we would probably be looking at an ag loan, even with a traditional bank.
Yep. Yeah, mortgage loans, they're really tied to residence, your residence, a house. a lot of times I think what you're alluding to a mortgage loan, to me a mortgage is the security document that secures a loan.
Oh.
But you're talking about possibly the secondary market too, which is where they bundle loans to get a cheaper interest rate and so forth. And yes, that's really just tied to houses. Ag loans, that's where your crop ground and your ag buildings are involved in. And generally, because those are usually kept in-house, and what I mean is the bank actually lends you their deposit money on it, their interest rates are slightly higher. You know, housing rates, if you've heard in the news, are down to 4% fixed, where ag loans are that 5 to 6%, just depending on how long you want that interest rate fixed for. Now, when I say 5 to 6%, that we're only talking, you know, up to 10 years fixed interest rate. Down payment requirements. If you weren't using FSA, a lot of times when it's ag ground, it's that 25 to 30% down. I think houses, now, like I said, this isn't my area of expertise, but I think houses you have to have 20% down.
Right.
I don't generally deal with that.
Okay.
So does that answer your questions there?
Yes, it does.
Okay.
Sorry, the phone is ringing at our house. Okay. I think we talked about collateral too. We happened to address, I think, a lot of these questions. One of our questions was, as we read through some of the materials for direct loans, and they require security or collateral, how beginning farmers typically meet that.
Yeah. Well, at minimum, we require one-to-one security. However, statutorily or by law, we have to take at least 150% or more if available, just depending on your case-by-case scenario and your cash flow. If we really think, cash flow's tight, but we think you can do it and we still want to write the loan, we may take a lien on all security, which means if you own a house outside of a farm that you're buying, we may take a mortgage on that house. We may take, even if we're doing just a real estate loan, we'll take a lien against your equipment and crops and so forth, just to shore things up. Now, in that particular case, you would have to visit the office that you're working with, and they would walk you through that.
Okay. So what about loans for equipment and facilities? Did some of those loans you talked about, were they real estate and equipment?
We keep that separate. Now, we have loans specifically for real estate, which could include capital improvements to the real estate, such as tiling or building a machine shed. That's the real estate loan programs. Now, the annual operating loan or the operating loan, that would be strictly equipment and breeding livestock and crop inputs and feed and that sort of thing. And the terms are different. When it's the equipment and so forth, that's up to 7 years. The interest rate's a little bit less, and that was at that 1.375, I believe I had there. And the real estate loan programs, that's that 20 years or more, depending on what particular real estate loan program that we used. And the interest rates are like I had in this previous slides, depending on the program you had.
Which types of loans? So, for everybody's interested in putting up high tunnels now. Which would it be an operating loan that you would use to do something like that? Would that be considered an infrastructure?
Yeah. Well, you're catching on a tricky one there.
Yeah.
High tunnels. What would the one? I've only worked with one, and I believe that was around $11,000. What are you looking at as far as the dollar amount?
I think that's probably anywhere from $10,000 to $20,000, depending on how big and whether or not you want it to be movable,
Okay.
or if you're going to run water or electricity out to it.
And generally, these don't have any concrete. They're just mainly poles in the ground that holds that tarp over it, correct?
That's correct.
In the particular case that I worked on, we were going to go with that 7-year machinery and equipment loan because the value of it was so small, and it was kind of a movable item. It wasn't a structure that was fastened to the ground, I should say, with footings and concrete and that sort of thing. And because of that, we were just going to go with the 7-year loan, and the interest rate was, lower than the real estate program, and they can afford those terms. That particular case is just, that's kind of a gray line there, and it's up to the loan officer to determine what program would fit. Now, if it was a steel machine shed structure, we would go with more of a real estate loan program versus the 7-year loan.
Okay.
Okay.
So I guess the next question is, so we talked about kind of non-traditional funding sources. There was a farm down in North Carolina that I knew about that they did some, I guess, like a capital campaign within their community, which includes their family and that kind of stuff. Are there any ways that non-traditional, non-commercial funding sources affect any of these FSA programs?
I kind of encourage it if you can. You know, you may have a family member that wants to lend you $10,000 at 1% money.
Sure.
If you can get those type of loans, go for it. They generally don't require security, just your good name. And that shores me up too. I hate to say it that way, but if you can invest $10,000 more into your operation, that's just that much more collateral that I have that I can use to help you out somewhere else.
Okay, great.
That's great.
It's good to know.
Oh, that's our last one.
Yeah, I think our last question was, it had to do with the amount of time, and I think you kind of alluded to it. Sometimes things can take a little bit longer than what they would with a conventional lender. But so what would, let's say we came into our local FSA office with our business plan and we're raring to go. How much time are we talking?
Well, I'll give you the procedural time and what it really takes. Procedure, from the day you submit the application, I have 10 days to review it. I then send you a letter that allows you 20 days to get me the missing items, or I may consider it complete at that time. If I don't consider it complete, I give you a letter to give me 20 days. If you don't get it to me within that 20 days, I give you another 10 days. If you don't get it to me within that 10 days, the application is automatically withdrawn. If you do get it to me, and at the point when I consider it complete, I believe I have another 60 days to get it approved. Now that's procedure. My office, that never happens. I always say if I have everything to me, it generally takes me no more than 2 to 3 weeks from the time I get the application to the time I get it done and approved.
Okay.
It just, a lot of times you're never waiting on me or the loan office that you're working with. We're always waiting on somebody to get us something that we need to make a decision.
Okay. So timeliness is of utmost importance with regard to providing.
And I can tell you from my personal experience, you'll hear from me a lot if I'm waiting from you, waiting for you.
Sure. That's good.
Okay.
Well, I think that pretty much answers most of the questions that we had. Is there anything that you can think that, or questions that you might have for us that we haven't covered so far, or that you think might give us more insight into this whole process?
Well, I think you guys have a good start. You have a good plan on where you want to go. I really don't have too many concerns. I really can't tailor a lot of it until you got kind of a site in mind. That's where I really start to wanting details, is once you have a property picked out that you think you might like and we get kind of some figures, then we can start throwing things together. And then at that time, once we can build that cash flow, we can discuss options on, non-farm income. Is that essential? A lot of times when you're first starting out an operation, I strongly encourage to keep some source of sustainable income coming through. Having that paycheck twice a month or once a month is really helpful when you're starting out an operation. Even though you may not want to keep doing it and want to spend more time on the farm, it really does help out those first couple of years. Other than that, most of it we would just have to sit down and go through the details at that time.
So I have one quick follow-up. Do you do any kind of pre-approval process, or do people usually walk into your door when they are ready to purchase a property? like have a property that they are
Well,
wanting to purchase now?
both. We don't really do a pre-approval because procedurally I have to have a purchase agreement in place that tells me the dollar amount. But what we do is I can sit down with you at any time and go through with what you're looking at and pencil things out for you. Um, and I'm speaking more on behalf of the state of Iowa. I don't know if other states do some sort of pre-approval with their loans, but we generally like to have hard numbers before we actually make a final approval. But we will walk you through every step of the way to make sure you and I are both on the same page of making that purchase. Does that answer your question? It was kind of
Yeah,
vague.
I think it's helpful to know too. I mean, based on what you've said anyway. I mean, once we contact a lender in our county or an FSA officer in our county, we could potentially talk with them and, like you said, sketch some of those things out so that when we are at that point, we have a good sense of what we will likely be approved for.
Okay.
That's great.
Cool.
Well, should we go to the audience questions?
Yeah.
Lucy, can you still hear us?
Yes, I can. Yeah, I can still hear you.
Okay. Okay. Let's start up. Where did we leave off with the audience questions? Do banks typically? I think we answered that.
No.
Should we be able to see the
501c3.
audience questions?
Oh, they're in the chat box. We'll go to the discussion.
Okay, there we go.
There was a question there that is it possible to loan a 501c3 nonprofit startup? I don't. Well, I got a box in my way. Startup small farm for land ownership or operating women daily management farm. I've never heard of that. I don't know. I don't know where to even direct that question there, so I'll have to bow out of that one. I'm just going through them now. Is off-farm income is part of the risk? What ratio do you like? 20 farm, 80% off-farm? We don't have any structured ratio as far as what portion of income comes from farm or off-farm. We just want a positive cash flow before we lend you money. If that's either, I have operations that's 100% of the income comes from the farm, and I have some that only, maybe 20, 30% comes from the farm if they're just starting out. We just like to have solid, reliable income coming in, and I'm not saying that farm income is not that, because in many cases it is. It's a case-by-case basis on what we look at. Any restrictions on doing business as or partnerships? Yes, I have to say there is some. If you do a real estate loan and you want to farm as a corporation, you have to purchase that farm as the corporation. Basically, to generalize that, however you farm the farm is how you have to own it and how you have to have the loan under. So that is kind of a restriction there. And another thing, as far as partnerships and corporations, if you have a whole bunch of people as owners of a corporation or partnership, all members as individuals have to meet our eligibility criteria. So, for instance, if you want a beginning farmer loan, all members have to be a beginning farmer or meet that lending criteria.
So in that case, with Erin and I, since she's not a beginning farmer or doesn't have that farm experience, how would that affect that?
No, it's a corporation because all members have to meet as a corporation. But as an individual or a joint operation, in your case, from what I understand, you guys are sole proprietors. Is that correct?
Our business was originally set up as an LLC, but my understanding is that we can change the structure of the organization once during the lifetime of the company.
Okay. Now, so you get your 3 years of experience through working through the homestead. But your wife, Erin, Erin, she has not had that.
No. Nope, not a farm.
Okay. That.
But I would be a
Because
joint owner in the. We're both listed right now
as the principal
partners
shareholders. Yeah, we're the only shareholders in the LLC.
Okay. Generally, if it's we have just one person in the corporation, as long as that person meets it, it's fine. I never had a situation on this one because usually if say the husband or the other member of a corporation has 3 years of experience, the wife or the other member has had that same experience as well. In this case, a different situation. I would actually have to pull the manual up and see how they direct me on that. So that question will have to be tailored to you, and I would have to answer that at a later time after I get my book out, or
Sure.
when you speak to your local FSA office.
Yeah, and I think our farm, Wilted Leaf Farm, has been in existence for about 3 years or so, and I think it could be said that Erin has participated in that in the operation of that farm. So I think that
I would say so. If she was there with you throughout all of this, I would say she probably meets the same experience that you have.
Yeah.
I see a question here that says, it sounds as though if a person has great credit, we cannot take advantage of FSA programs. Not necessarily the case. I've had beginning farmers or farmers in general that have great credit. You pull a credit report, they have a great score. However, they may still not meet conventional credit lending criteria. Say you're buying that $300,000 farm. If you don't have that 25 to 30% down that the local banks may have, that's a reason for denial, and that's a reason for us to pick that loan up and help you out. So that statement there, that's not necessarily true. If you do have good credit, we still take you on. And I think, is that the bottom of those questions? That looks like the last of those questions. If there's anything else, let me know.
I think that's it for us.
Great. Well, we can just keep taking questions from the audience until 8:30, if there are any. So keep your questions coming, audience. Maybe I'll just thank the beginners, Erin and Jason, for joining us tonight. I really think you guys did a great job and had really good questions, which are really relevant to a lot of beginners.
Yep. You sound like the typical person people we work with on a day-to-day basis at our office.
That's good.
So I thank you for letting me tailor your questions today.
No, we really appreciate it, and thanks for saying that, because going into this literally as greenhorns with regard to farming and also with regard to lending, there's a lot of information out there, and you feel like there's no way you could really digest all of it. So thanks very much for all that great information. And
yeah, how about this great public servant, Andy Hunziker, everybody. Great public servant. He's doing a great job. He's coming and not getting paid to come over in a weeknight, and so
appreciate it. Thank you.
And Andy, we'll probably be calling on you again, I'm sure, even if you don't end up being our county agent.
There's a last few questions I see popping up here now. How do student loans affect getting a loan? We just got to show repayment. Like I said, we are mainly cash flow lenders. We throw all loans into our cash flow. As long as you show repayment with 1 year's income, 1 year's expenses, and 1 year's payments, we'll still write it. It really, it does affect it, but as long as you show repayment, that's all that really matters. So I think that answers that question. And any age restrictions for getting into farming? No. I've had beginning farmers that were in their 50s. They hadn't farmed for over 10 years. So it just depends on when you get into it. It's a great time right now because farming seems to be very profitable. I see a question that just popped up. What if we have student loans, but we are still taking courses that haven't entered repayment? What we do, now if you get like a 1-year annual operating loan, say you just rented a farm and you want to put a field of corn in and harvest it at the end of the year and you just want a loan for seed, fertilizer, and chemicals, we don't really look at repayment of that loan if it's in deferment right then and there. However, if you come to me and want to buy a farm, we will have to estimate, since our loans for 20, 30 years or more, we have to estimate what that payment is when it comes out of deferment. But we also, now this is a case-by-case scenario, we have to look at, you're still in college, what happens when you get out of college to make that payment? You might get an off-farm job for, so many thousands of dollars a year to make that payment. So we have to look at that, and that's about all I can say on that question. I see a question, can you get a loan for meat, goat ranching, or just farming? Like I said, we work with everything. As long as you're producing some sort of commodity, that's what we're driving for. So we can always take a look at it. Now, it depends on what you're going to do with them. Now, if you want to raise meat, goats for showing and not for the commodity of them, that's a different story. So we just have to look at it as a case-by-case basis.
Great questions, everybody. While you're thinking of more questions, I wanted to let you know that next week we'll have another Farminar, same time, Tuesday evening. It'll be on marketing with distributors for folks who are doing local food sales. We're going to have a local harvest supply food distributor to visit with you and farmers who are selling to that market. So we hope to have you there. And then throughout the rest of the off-season, we'll have weekly Farminars on stuff that is relevant to row crop farmers, horticulture farmers, nut farmers. We're kind of like the FSA in that respect. We work with everybody. So please join us again. We've got another question here.
As far as anyone to help write a business plan, what I would say on that, when you visit, as far as business plan, we don't write those, but we can help as far as the financial side of it, if it's profitable or not. We will help you research that if you are trying to obtain a loan from us. We do just as much research. We encourage you to do a lot of the research, but we will do it on our own to make sure that what you're bringing to us is verifiable information. So like I said, we basically look at the financial side of it, but it just depends on your goals and stuff that you may have in the business plan. That's going to be up to you.
Erin and Jason, any hints to offer a beginning farmer looking at writing a business plan?
My first piece of advice would be to try to enroll in the Savings Incentive Program through PFI because it does require that you write the business plan, and it also encourages you to develop or create a team of folks that can help you in that process. And then also it allows you, especially if you take part in the other opportunities that PFI presents to you, it gives you a lot of opportunities to network and meet those people that can actually do that part with helping you get the plan written.
Luke, I did not pay Jason.
No, I'm an avid PFI supporter, so unabashed. Other than that, there are Penny Brown Huber up in Ames does a class called Grow Your Small Market Farm, which I've gone through. It's a very helpful class, and the whole purpose of the class is to get you to develop a business plan during the course of the class. I think you go for 8 to 10. I think it's about 8 to 10 weeks in the off season, and she brings in other presenters that tackle different parts of the plan So it's a great program because you're actually in the process of writing it through the whole thing. And then aside from Grow Your Small Market Farm, I know that there are other similar programs in other parts of the country doing the same thing. And then also you can do, just a general search online for business planning resources, and there are all kinds of books out there available for people to help you. They don't necessarily tell you how to write the plan, but they tell you what parts of the plan are important, and which parts are important to lenders and to you, I guess, for making good decisions.
Angela in Kansas, are you looking for, what kind of resources are you looking for? Farmer information from farmers, or FSA resources in Kansas? We put together a business resources table to try to list out all the different ways you can get help writing a business plan. So take a look at that link. Many of those resources are available nationwide, like the small business development centers, who actually sit down with you and walk you through basics of business planning. We also have a Smart Start program in Iowa, which is the first Tuesday of every month at different regional centers around the state.
I want to say that I think that Kansas State has a beginning farmers program too. I feel like I've heard about it through their High Tunnels listserv. So if you do a Google search for the High Tunnels listserv, you might be able to get linked up with some folks. They're generally small scale producers. And they might be able to point you in the right direction in Kansas for business development programs.
The question about the Savings Incentive Program, we started this program 2 years ago, and it's the largest program of its type in the country that we know of. California Farm Link created a great program that we modeled our program after, but they were serving immigrant farm workers. And I think they only were able to have funding for like 30 spots for their savings incentive program called an Individual Development Account, IDA. And there's actually, in the Farm Bill, it was authorized in 2008 to make IDA funding to fund savings matches like the savings incentive program, the individual development accounts, there was funding in the Farm Bill written in to say, this is a great thing, this is going to help beginners across the nation, we should do this. But Congress never acted to fund it, unfortunately. So while you're calling your congresspeople about the secret dealings behind closed doors, tell them to fund the Beginning Farmer Rancher Development Program individual development account. I think $2 million maybe, or $10 million for nationwide IDA opportunities. We could make this available all over the place.
I see a question just popped up. For someone considering fruit and other perennial crops, how would the 3 years of experience be effective with limited marketable product within the first 3 years? The 3 years of experience is only relevant to purchasing our real estate loans for purchasing real estate. I can't speak on behalf of Congress why they put that in our procedure, but they do require that. And so we can still lend you annual operating loans, or for the product, to rent ground, or for inputs and machinery equipment and so forth. We can do that without that 3 years of experience, but that 3-year requirement is statutory or required for that real estate loan program. I hope that answers that question.
Dustin, we are working with California Farm Link. Forgot to mention this. We are meeting with them, I think maybe twice a year for 3 years. We're getting together like 20 different nonprofits like ours that are working across the country, and we're trying to share this knowledge on how to build these programs so we can be across the country. As soon as that funding is written in by Congress, we'll have the nonprofit sector ready to go to implement the programs and to funnel those funds to beginners like yourself. But probably more importantly than the money is the business planning. Would you say that, Andy, that business planning is one of the things that farmers come to you with a little bit more hesitation about than anything else?
Well, a lot of times they just don't know where to start, especially if they're just getting into farming. A lot of times we have college students coming to us. They just graduated with a degree and they want to get into farming. They don't know. They kind of got an idea of what they want to do, but they just don't know how to start. So we just kind of mentor them as far as what our loan requirements are to get us going and what research they need to do. But it solely kind of lies on them, on where they need to begin doing the research. And by all means, throughout all that, they can call us and we could help them out and help them with some of that research as well. Like I said, we are into numbers. The agency, when we put together loans, we want to know facts and figures as far as is this verifiable income and how can we make sure we're getting that for our loan repayment.
Well, that's 8:30, folks. I see Colt raised his hand. Colt, do you have a question? If you have a question, you can put it in the chat box, but we're going to stop recording and call it a night for tonight. And I really thank you all for being part of this evening, and join us again in the future.
Thanks, Luke.
Thank you.
Thanks.